Bitcoin just logged its highest daily close ever, as it continues to defy expectations and grind slowly higher and higher. BlackRock is warning that the dollar is losing its shine, and that investors will continue to flee to Bitcoin. Rate cuts could be coming sooner than we think, and Strategy is literally issuing a Bitcoin-backed fiat alternative. And still, no mania. No blow-off top in sight. Could this wave of corporate adoption slowly grind into a dot-com style bubble? One that doesn't hit peak mania in a true blow-off top until 2026 or beyond. Maybe even 1 million Bitcoin comes a lot sooner than we think. Bitcoin just had its highest daily close ever, as it closed the last 2 trading days right around $120,000 per coin. Now a $2.4 trillion asset, it sits only behind Amazon, Microsoft, Apple, Nvidia, and gold in the world's top assets by market cap. And BlackRock just put it plainly. In a new research piece by the $12.5 trillion asset manager, they claimed the dollar is losing its shine and that a growing number of investors are now looking to Bitcoin as a true portfolio diversifier. This is just the latest admission from BlackRock that Bitcoin has its sights set directly on competing with the dollar and US Treasuries as the world's pristine form of collateral. Meanwhile, the bond market is pricing in 2 rate cuts by year end and 3 more in 2026, which could bring the Fed funds rate down to near 3%. Think about that for a second. Bitcoin ran from $42,000 to $123,000 during the tightest monetary policy in modern history. If we really shift back towards easy money, what do you think happens next? Oh, and let's not forget, the president's own media company recently announced that 2/3 of their entire liquid treasury is now in Bitcoin. And the market's reaction? Business as usual. Quiet absorption. No fireworks and no sign of a blow-off top. Bitcoin just continues to build this next base of support as this stair-step price pattern begins to look undeniable and impossible to ignore. But to really help understand this moment, let's listen to what Joe Carlasare said on the Q2 Bitcoin Mastermind panel with Preston Pysh.
It's not just Bitcoin, guys. NASDAQ has made a new all-time high today. The S&P 500, all-time high today. Bitcoin breaking out. And the most interesting thing about it to me is that we know that when Bitcoin runs, it runs hard. And you had this whole year, basically, we were just consolidating over the inauguration day high of, what was it, 110, somewhere there. We're going to break here and we're going to go higher. And I think this persistent services inflation, which there's signs of it picking up again, is going to keep us closer to 3% than 2%. And what is the Fed going to do in that environment? Is the Fed really going to cut in the face of that? I know they're getting browbeat, but that in some ways makes the problem worse. So really fascinating here. I think the overall TLDR is that the recession risks are totally overblown based on the current data.
Yep. Holy bull in the house.
Yeah. I mean, listen, I think this is an absolutely exciting time to be long risk assets across the board, but especially with Bitcoin, because we've got every catalyst in the world. We've got massive Bitcoin treasury companies, which I'm sure we'll get into, sucking up Bitcoin, planning to buy Bitcoin, getting in the marketplace. We got a frenzy on that. We got Bitcoin, I think, structurally undervalued here. We look at all-time high, and sometimes we get this natural PTSD, like, oh, this seems a little weak. I think it's the opposite. I would be curious, Jeff, your thoughts, or Preston or Huddle, like, do you really feel like there's leverage in the Bitcoin space right now? I feel like there's a complete lack of leverage.
Right. That's what I'm saying. That burner hasn't even turned on yet.
Yeah.
Yeah. We're not even close to the exciting part yet of a bull market. And I think, to you guys' point, just a few days ago, I don't post very much on social media, but on Nostr, I posted a little thing of a reverse head and shoulders pattern that I've been watching play out with Bitcoin. And we're pretty much there right now. I think it taps on the door and then it shoots higher. And I think we'll be at 140 to 160 before people can blink. And so people who are sitting on the sideline waiting for it to pull back again, I think they're out of luck.
This is the key signal. Bitcoin is continuously grinding higher with almost no speculative leverage in the system at all. Now, we'll get into leverage and what this cycle could look like if a traditional bubble or blow-off top does emerge down the road a bit later in the show. But first, many of you might be asking why the price action is looking so tame when compared to previous bull cycles. Well, let's take a look at what's really happening under the market hood. Each mini breakout sparks a quick rush of leverage longs. Market makers take the other side of that bet, then flush those traders out, sending the price right back into or just above the prior range. Meanwhile, price-agnostic buyers like corporate treasuries are running steady algorithmic buy programs. Instead of dropping one giant order that could spike the price, they quietly dip smaller buys into the market over hours and days. This is designed to blend in, to slowly soak up supply without big market reactions. Over time, the available coins in that price range disappear into stronger hands. And once the market thins out, Bitcoin stair steps higher to the next zone of sellers. It's methodical. It's sustainable, and it's why Bitcoin is climbing in the least euphoric way we've ever seen during a bull phase. So while retail sits on the sidelines waiting for some dramatic pullback, this market is being systematically absorbed by buyers who don't care about short-term price. They just want to own more Bitcoin. And as Swan CEO Corey Clipston put it, people out here calling tops when the buys haven't even started yet for any of the big launches. Corey is responding to an announcement by big Treasury player Nakamoto, which announced that their merger with Kindly MD is progressing favorably and looking to close in mid-August. And there are several other large Bitcoin Treasury players that have also not even started hitting the buy button yet. So these Treasury buyers are already relentless, and there's no sign of them stopping anytime soon. And now we're starting to see the next evolution of this trend. Bitcoin Treasuries issuing their own forms of money. Strategy just launched their latest preferred stock offering, STRC, or Stretch, which some are labeling as an algorithmic Bitcoin-backed stablecoin. Now, don't let the term scare you away. Think of STRC like super cash. It stays pegged to $100, but it's also a yield-bearing asset, paying out a monthly dividend starting at 9%. And the yield adjusts algorithmically to keep it stable. The key difference here is liquidity. Unlike the failed algorithmic stablecoins of the past like Terra Luna, STRC is backed by the most liquid Bitcoin treasury in the market in MSTR. For the first time ever, a Bitcoin treasury company is effectively issuing its own fiat alternative, Bitcoin-backed money that can move instantly 24/7. Bitcoin isn't just competing with gold anymore. As BlackRock and STRC are making clear, it's starting to compete with the dollar itself. So just zoom out and think about what's happening here. Treasury companies are stacking relentlessly, sovereigns are quietly diversifying reserves, and Bitcoin native super cash is emerging, and still very little leverage has entered this market. But to understand just how far this treasury mania can go, and why it might extend for years, not months, let's go back to the same mastermind panel.
I actually personally believe the treasury company bubble can get, like I said, .com level large, which was $11 trillion in that era. Because basically when you have this big type of bubble, it's like around an idea. The .com bubble was around the internet. And it was like the thing I said earlier. Everybody now believes in the Bitcoin story. Well, in 1996, everybody believed in the internet story. They just weren't really participating. And then the fever caught them at some point between 97 and 2000. And suddenly everybody and their mother was in on the thing, right? And like every idea that was possibly going to happen on the internet had a company that was associated with it doing a rudimentary or crappy or fake version of that idea in 1996, right? Like broadcast.com. I mean, yeah, it's a big deal that we all watch on the internet, right? But we don't watch any of Mark Cuban. But Mark Cuban got paid a lot of money for that idea. And I think same thing with the treasury companies now is that the big idea is Bitcoin. Everybody goes, Bitcoin's going to happen. I missed it, but it's going to happen, right? And we're in the infancy of this bubble. And what's going to happen, I think, is that the treasury companies need to differentiate themselves. Because if you look at XYZ Treasury versus what's the difference between Nakamoto and CEP, or sorry, Jack Mallers 21, or the MetaPlanet, or this or that or whatever, you need to have a credible story about how you're differentiated from your competitors. That credible story is going to be something about Sats flow, Bitcoin specific businesses, how you generate Bitcoin capital. Oh, we're doing it on the Lightning Network. Oh, we're doing it over here with insurance. Oh, we're doing it over here with this. We're doing it over here with that. And like pets.com before it in the .com bubble, a lot of these ideas are going to be real ideas that will happen in the future. Pets.com later became Chewy, which sold to PetSmart for $3 billion. But in the interim, we have no ability in 1997 to ship giant bags of dog food through the mail, through the U.S. Postal Service, right? So like there's missing infrastructure that's going to cause some of these ideas not to come to fruition, but people are going to want to bet on them now. And that's the thing that's going to cause the bubble, I think, because everyone's going to get really excited about the internet of money, Bitcoin, the future of where this is happening. And that's why I think, like Jeff was saying, we could expand into Q2 of 26. Dude, I think we could be a 3 or 4 year run with like a slight lull in between that takes us up to beyond $1 million.
What American HODL lays out here is starting to look undeniable when you really pay close attention. Strategy's latest line of financial products is just the start of this so-called Bitcoin treasury bubble. And I think in this entire conversation, they make the case for an extended bull market where the actual fireworks don't start to happen until well into 2026. So instead of a continual stair-step pattern up that eventually leads to hyper-Bitcoinization, we still could just be in the warm-up phase of this hype cycle. That brings us to a leverage and mania-fueled blow-off top of north of $300,000 to $500,000 in 2026 or even later. The fact is, the longer this thing stair steps up in the pattern it has been, the higher it can go in a true cycle top. So if we do extend into 2027 or 2028 like American Hodl thinks, we could even see it touch $1 million well before 2030. And if you want to front run this hype and accumulate Bitcoin the same way these treasuries do, strategically, securely, and without emotion, talk to the team at Swan Private. The Swan Private team works with high net worth individuals and businesses to build serious Bitcoin positions with world-class custody and concierge service. Visit swan.com/private to book a call with a member of the team today. So let's take a step back and recap. We have BlackRock telling the world the dollar is fading. We have the bond market pricing in rate cuts and easy money coming back into the system soon. We have Bitcoin native super cash emerging to compete directly with fiat. We have treasury companies, sovereigns, and strategic buyers stacking relentlessly, while speculative leverage hasn't even entered the picture. So what happens when the leverage finally comes? What happens when treasuries, sovereigns, and algorithmic Bitcoin-backed liquidity are all competing for the same scarce supply? The fuse is most definitely already lit. The only question is, how far can this thing run? And if you want to meet the people helping build the future of money in policy, in finance, and in infrastructure, then join us at BTC in DC this September. This is so much more than just another conference. It's where Bitcoin meets the real world, lawmakers, asset managers, builders, and sovereign leaders, all under one roof. Go to btcindc.com and use the promo code SWAN for 10% off tickets. And finally, a quick shout out to Mara, the world's largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. So what do you think? When does leverage and mania enter the picture this cycle? Will we see the cycle top extend into 2026 or later? Drop a comment below with your thoughts, like this video, share it with a friend, and make sure you're subscribed for more high signal videos and analysis every single day. Thanks for watching, and remember, TikTok next block.